Hey everyone, welcome to another episode of Real Talk with Joe and Cody. And I know you probably were sitting on the edge of your seat last week, waiting for our faces to pop up
I
live.
know.
And you were sick. Cody
I
got the
was.
sickness, so we couldn't do it.
I got the bug and it just, it came
Mm,
out of nowhere and I'm surprised nobody else in my family got it.
that sucks.
So I was glad about that, but I don't know where it came from. And I talked to people over the last probably a month or so, a month and a half, and it seemed like everybody that I talked to was just getting over something, or a family member was like just nasty sick. And
Yeah, yeah.
I don't normally get sick very often, so I'm like,
It's time.
I probably won't get that. And
It's
sure
time.
enough, this old age is creeping up.
It's time. But when you came back in full force and you have a beautiful new studio.
Yeah.
You look like a professional podcaster. It looks
Well,
great. Like you're ready to
that's
go.
fake it till you make it. That's what I've always heard.
That's what we've been doing for a while now.
Yeah, yeah.
Um,
How you been?
Good, man. Good. Just a little announcement. Rory's team is number 2 in state for basketball. So if anyone wants
Wow.
to go, there's basketball in Salem this weekend that'll be going on. So
Number two.
yeah, it's a pretty big deal. These are they're really good athletes. A lot of fun to watch. So yeah, we
Yeah.
start on Friday and work our way hopefully through to the state championship. So
Dude, do they get like a first round buy or anything, or do they just jump right into it?
they're because of the ranking, because of them being ranked so high, they will play a lesser ranked team when they do first start.
Okay.
So they don't have a bye necessarily, but I guess they kind of do. Other teams will play, and then we play that winner. I think if I can recollect right. Either way, it's a lower ranked team playing us, so we kind of got
Yeah.
a good ranking to work our way up. But
Nice.
there's some tough teams coming up if we make it. So
Yep.
yeah.
One day at a time.
I know.
Sound
It's
like a
kind of cool to
coach.
see, though. Kind of exciting to see, and getting practice every day, getting them all ready, and all that stuff. So they're all excited and ready to move.
I
So yeah,
bet.
we got that, and then
That's a big
the
deal.
following week is baseball. Back to baseball. We'll be up in your neck of the woods in Washington.
Okay.
A lot of our lives for the next few months. So
Yeah.
maybe we'll
Yeah.
have to
Where
see each other
where
in
all
real
do you
life.
play up here?
Good question. I sh-
Or is it farther north?
I should know that. It's right over the border. I should know what it
Okay.
is, but I don't. But I'll let you know
That's
offline.
okay.
Yeah.
It's all the same.
But yeah, we got that. So back on to the next
Nice.
sport after this, and that'll be an exciting weekend. So we'll let you know how it goes next week.
Yes. Live
But
stream that bad boy.
that's a good. Well, we do have Game Changer, so if you do want to watch, you can watch on Game Changer. So just let me know.
Little plug.
I know you don't have anything
Yes.
else going on besides my kids'
Right.
state tournament on the weekends.
Sorry,
uh,
honey. I got a game to watch.
yes, exactly. Rory's playing. So, yeah. So I just wanted to talk to you real fast this week. Got some clients that have been interested in a new construction here in Wilsonville and the surrounding areas, and various builders are different in how they handle specifically contingent buyers. So people that are
Hmm.
wanting a new home. New construction home, want to work on the build and get going, but they have to sell their house first. I know personally from some builders here, Stonebridge, for example, is totally cool with that sort of stuff and working around that. Other builders are not fans of that and want you to be
Hmm.
under contract and almost closed before you can move. As you can see, that's an issue for some people
Yes.
to be putting your home on the market, getting it under contract, going through everything, and then you have to make an offer to the new builder and hopefully get it accepted and wait the timeline for a new build.
Yeah,
So
that's a little scary.
I was like, why wouldn't I talk to Cody and see if he has any insight into what you could do as a lender for
Hmm.
people in that scenario, particularly?
Yeah, I mean, I feel like most of the time when that type of stuff comes up, we're looking at some of that short-term financing to help bridge that gap. So there's bridge loans and HELOCs. So for any of those, any of you that don't know, a HELOC is a home equity line of credit. And then a bridge loan is just kind of like what it sounds like. It's a loan that is bridging the gap between you get it on your current home, and you essentially are getting a loan for the down payment for the next one because maybe you have to wait. So depending on the builder, they might say one is okay, one is not okay. But that helps with people that are doing more of the contingent and or waiting until, because if the timelines just don't line up right, then maybe you don't have all that down payment, so you're essentially just getting a loan to help cover that gap so that you can close on the home and then sell your property afterwards. So it might be a little bit different for builders that don't like the contingent part of it, but this does bridge the gap, because if the contingency is not based on you qualifying, the contingency is really, I don't have the down payment unless my house sells. But now I have the down payment because I was able to get a loan for that, and then you're just going to pay it off with the proceeds. That's where that seems to fall into play. So it kind of depends on your situation. HELOCs, home equity line of credit, those are usually pretty good because they're pretty cheap to get. Like there's not a lot of fees associated with it. Bridge loans can be a little bit more expensive, and not everybody will offer those, because that is like the definition of a short-term loan. It's
Yeah.
it's really just meant to be for a couple months, so it's not something that you're going to want to drag out for years. But
Is it a pretty high
those,
interest rate?
yeah, yeah,
Yeah. Just because they're
definitely a lot
expecting
higher
that.
than
Yeah.
what you're going to be looking at for like a normal loan, probably something in the
Yeah.
nines.
And how much do they loan to you for a bridge loan?
So it's going to kind of depend on your overall debt to income, credit, all
Okay.
that stuff. But usually they'll go up to about 90%. So whatever you owe on your home, and then you've got the value, whatever that gap is, you can essentially finance between your current mortgage and your bridge loan or home equity line of credit, whatever it might be. A lot of them will go up to 90%. So
Okay.
leaving you with only 10% equity
So the downside is
left.
that a higher interest rate, but the upside is that I think wouldn't that be more loaning you more money than a HELOC generally?
Yeah.
So
Yeah.
if you needed more money, the bridge loan. Jeez Louise, I can't even
Yes.
talk today. I can't even think.
Yeah. Yeah.
Um,
You can tend to get a little bit more, because it's such a short term thing. But
okay.
yeah, a lot of them are situational. I know a lot of credit unions offer those. Not as many seem to be offering bridge loans anymore, and I think it's just probably because it's a short-term thing, and
Yeah.
banks want to make money.
Yeah.
So if the fee side of it is just not making sense for them, and they're only getting interest for 2 or 3 months, it's like,
Yeah.
well, we're really not, for all the work that we're going through and the cost that it takes to keep some of these programs going. Sometimes it just doesn't make sense for companies to continue to do them. So it's
Okay.
all money related, right?
Yeah.
Like
Yeah.
if banks can make money off of it, they'll offer it. If it's not really pulling its weight, then they'll just say, nope, we're no longer doing this.
For sure. Yeah, it's good to
Yeah.
know. And we've talked about HELOCs over and over again. It's like, get a HELOC. If you don't have,
Hmm.
just for whatever reason, just get one. You don't have to
Yeah.
use it.
Yeah.
I don't think a lot of people
Emergency
are
fund.
low about it. It's just nice to have it. And if you never
Yeah.
touch it, you never touch it. But if you need to, then you have it, and
Right.
it's a good deal. So,
It is. Yeah. How are you seeing
rates,
with the new construction stuff? Because
new construction. Yeah, it's good. It's you hear the national stories. The inventory is starting to increase. New construction
Mhm.
inventory is starting to increase, outpacing the sales and things like that nationally. I can speak anecdotally for locally Wilsonville and the surrounding areas, is that it's still trucking along.
Yeah.
There's not a real slowdown. There may be a little bit more stabilization of, things. Builders are
Hmm.
offering great incentives now,
They are.
which a lot of people are taking advantage of, because as we've talked about, is the demand is still there. Like, and when builders are offering these super low rates or buy down rates and all that sort of stuff, people are starting to yoink those up pretty quick and to get a brand new
Yeah.
home for that. So locally here, I don't see a ton of like crazy high inventory, and they're just like throwing these houses away,
Right.
but you do start to see a little inkling of that national trend of, the inventory is going up and the demand is going down, but the rates are starting to creep a little bit down. Yeah.
They are. Yeah. Yeah. We've had a good couple weeks there where they just kind of kept coming down. I think we're in line right now where things were at in December. Um, and if we can push to kind of this next level, it looks like yesterday and today, I think we may have kind of hit our floor, if you will, to where it might kind of just stabilize here, a little bit of back and forth. But we did have a good rally. So if we can kind of just get things to stabilize here for a little bit, the next ceiling that we have is back where rates were at in October. So it seems like there's these trends, these ongoing trends that it's like if it can push through what the latest kind of peak was, or low, I guess you would call it, then it tends to have a good chance to work to its next previous low.
Okay.
But if it can't break through there, it tends to just kind of sit, and it's kind of weird how it works. It's almost like there's like this wall there, and if the bond market doesn't break through that wall, it tends to just kind of flatten out until
Cover.
something else happens, and then there's enough momentum to kind of carry it up to that next one. So that's where it seems like we're at right now. It's really kind of stabilized, I guess, which is great because we've seen, again, it's not like it's, you look back, you see these good rallies, and you're like, oh man, this is awesome. And then you look back at when the last time it was this good, and it was just a few months ago.
Yeah,
But still, that's positive momentum.
for
So
sure.
I think if we can kind of keep that going, I think there's going to be a lot of economic data over the next couple months that will really start to paint the picture of where things are going to go. I think I'm glad I don't work for any of those departments to try to figure out like what is happening, because I feel
Yeah,
like there's going to be reports that say this is bad and this is good, and which one is more important to put emphasis on. Inflation has obviously been the big thing, but we might, with a lot of these government layoffs, we could start to see the unemployment numbers go up, and then you're looking at trying to balance that out of is this a sign of the economy? Is this a sign of what? So I don't know.
I see.
I'm just like
Yeah,
buckled in and
yeah, and just enjoy
riding
these
along.
lower rates. I was talking
Yeah.
to someone this week about that though, and it's important, I think, for people that are thinking about it. There is people are like, well, I'm going to wait for the rates to get down to 4 or 5 or something like that. There is opportunity to buy down those rates. And I don't think a lot of people know what that is. So I
Yeah.
would suggest like we could go into it for an hour here today of what a buy down looks like and whether it's worth, depending on your long-term plan with a home or long-term plan with a mortgage, whether it's worth it to
Hmm.
do that
Yeah.
or not. But people can, there is a possibility to either A, buy down the rate or get concessions from the seller in order to buy down the rate. So,
Hmm.
we're getting into that area where fives is reasonable with a buy down, right? Am I
Yeah.
wrong with that?
No, you're totally right. Yeah.
And so don't just be deceived by that, not deceived, but just see that 6 something% and think that's the rate. You can buy it
Hmm.
down with the market how it is now. There's a lot more concessions going on from sellers to contribute to closing costs or things like that and to rate buy downs. So
Yeah.
it's an opportunity to get a rate in the fives. So
Totally. And there's so much more when you're looking at monthly payment, because that's where it tends to be, that's the biggest pain point for most people is monthly payment. If you can say this is what your payment is, if we invest some of this money or use some of the seller's money to invest into lowering the rate, you're going to get your payment closer to where you're at, as opposed to, you know, dropping the price or trying to get in 20,000 lower. Yeah, that's great overall.
for
But
sure.
if the payment, and I hate to, when having these conversations with people, obviously the price matters, but at the end of the day, can you afford it monthly? Because if you pay $20,000 more, or say not try to cut below 20 grand and use that towards buying the rate down, whether it's temporary or permanent, um, you're you're in such a better shape, such a better position than you are, because $20,000 affecting your monthly payment is not very much in the big picture. Like, you think it would be a lot, but it's
I
really
agree.
not as much as you think it would, as opposed to buying the interest rate down 0.5%.
I agree.
That's like, that makes a huge difference.
Yeah, I think that it's the agent's job to make sure you're getting the best price.
Hmm.
It's short of that, 99.9% of the people buy a home for the price that they can afford a mortgage at. Like, if that
Hmm.
makes sense.
Totally.
If the rate is 3% and they can afford $1 million home that they could have afforded a $600,000 home with the rates at 7%,
Hmm.
the price doesn't matter. Obviously, your agent needs to guide you on whether you're getting a good deal on the home and there will be a return on that down the road. But the rate is the bigger deal because that's what everyone cares about, is that mortgage rate. You don't want to be paying a mortgage in
Yeah.
general on a house that you're upside down in. Having said that, that's your agent's job to make sure you're not doing that. It's Cody's job to make sure you get the lowest monthly payment. And I think that's
Hmm.
where people need to kind of, now that we're seeing rates kind of stabilize here, we need to start utilizing that as buyers and buyers agents to say, hey, we don't need a price drop. We need a closing cost credit. So,
Yeah. Well, and,
um,
and you look at those 2020, 2021, when rates were low like they were, people were more than happy in a way to overpay for the home
Yeah.
because
Yeah.
it all came down to that monthly payment. It's
Yep.
like, dude, I never thought that we'd be able to buy this much of a house, and it seems kind of crazy that we're spending this much money, but our
For sure.
payment is low enough that it's that weird, it's not a housing crash where you're buying something for 200,000, but really the payment is in my opinion, and I think most people would probably agree, it is the most important thing, right?
Hmm.
Like if you got $1 million home, but your payment is what you can afford and you're comfortable with it, then yeah, it might feel weird like, oh, do we really want to spend $1 million on this property? But if the payment works,
And the house
that's
is
no
worth it,
different than,
you know?
yeah,
Yeah,
it's no different than buying a $500,000 house
for sure.
now that where the payment's higher. What you can afford on a monthly basis, just, if you're able to get something bigger than what you thought you could and you can afford the payment, then that just means likely you've got an even bigger asset down the road.
For
So,
sure. And for sellers, or future sellers is the same thing. Is like they think, well, let's just drop it 10K or let's just drop
mhm,
it 15K because it hasn't been selling. Really important to consider offering 15K in closing cost credit or rate buy downs
yeah,
or 2-1 buy down, or because that is going to get a person that could not afford and was not even looking at your home at a certain rate to say, oh, okay, I can afford this home. This is what we wanted in
yeah.
a home, but we couldn't afford it at the rate. So things to consider when you're looking in this spring to buy and sell. So
Yes, yes, because from my side of it, from my perspective on the financing side, that the biggest pain points for people are the amount that they have to come up with for closing costs and down payment and monthly payment. So as a seller, like you said, if you can eliminate some of both of those, or say you're able to pay all the closing costs, or instead of paying the closing costs, do a really a good significant rate buy down, like you have now just eliminated one of those big problems for I would say, I'm throwing out a number here, 70-80% of the buyers.
hmm
I know you
hmm
got some that are paying cash, or they just sold their house and they have plenty of money, so they're good, but I think most people that are looking at buying, it's like it's a struggle to get the money, and then it's also a struggle to find a payment that works for them. So it's a
for sure,
huge bargaining chip, when you're already planning on dropping $15,000 off your price anyways. You might as well use it to incentivize them as opposed to just seeing the price drop on the listing and going, oh, okay, maybe some more people will get intrigued by that, like, oh,
for
now we
sure.
should jump on it.
The amount of people that come in that enter your market based on you dropping 15K is very slim. Um,
Hmm.
but the amount of people that can buy into a home now that you've paid down their rate 1% or half a point,
Yeah.
like that brings in a much larger pool of buyers that are now
Hmm.
looking at your home, uh, regardless of what that price drop. That price drop of 15K when people searching Redfin and Zillow and all the stuff they do, they're
Yeah.
not. That 15K is not going to bring in like a billion other people, depending on your price range. But
Sure. Yep.
the rate drop or offering the rate drop is the bigger thing, in my opinion, my humble
I agree.
opinion.
I'm
And
with you.
sometimes dropping the price is big too, but it's something to consider. And not a lot of people do consider it. So,
Hmm. Yep. Got to use the
anyways,
leverage you have.
yeah. Well, it's good to see you healthy. Good to see your new
Hey,
studio. You
appreciate it.
look
Yeah.
good in there, and
Thank
now
you.
it makes me jealous, and I want to change my stuff up. So I'm
Well,
gonna have to
I'll send you down a couple
figure my
lights.
life out. But it's good to see you, man, and we'll let
Hey,
you
you
know
too.
how it goes
Appreciate it.
this weekend with the state tourney.
Yeah, yeah, definitely let me know. I'm excited, and sounds like you've got a listing appointment that you're heading to.
Yes, sir. Yes, sir.
All
So
right.
we're headed to
Well, good
that.
luck with
So
that.
okay, we'll talk to you later.
All right, man. See
Okay.
ya.